The top business stories live from the Sky News City studio. Ryanair to reward shareholders with regular dividends as the low-cost airline's post-COVID recovery continues. It comes as global tourism executives meet in London to shape the future of travel. I'll be joined by the Chief Executive of Thomas Cook. Plus, new government plans for an annual system to award North Sea oil and gas licences. Good morning, this is Business Live with me, Ian King. Ryanair this morning announced that it is to start paying regular dividends to shareholders as its strong post-COVID recovery continues. Well, Europe's biggest airline, which has paid one-off dividends in the past but not regular ones, was reporting a profit after tax of €2.18 billion for the 6 months to the end of September. That was a record for the company and up 59% on the same period last year. Ryanair carried a record 105.4 million passengers during the period, up 11% on a year ago. It's targeting 300 million passengers a year by 2034. I've been speaking with Neil Sorahan, the Chief Financial Officer, and I began by asking him about that decision to start paying regular dividends.
It's been a long time coming. We've obviously had a number of ad hoc dividends and specials and buybacks over the past number of years. We've paid just under $7 billion, but I think it's a strong show of confidence in the balance sheet and in the cash flow performance in the business. That now we're happy that we can sustain growth over the next decade to 300 million passengers, pay down our debt, meet our commitments in relation to our people, and we've already restored pay and put multi-year pay agreements in place, but also now return cash to our shareholders, who in fairness very bravely put 400 million into Ryanair in the depths of COVID, and that enabled us to raise an 850 million bond, and we came out a lot stronger. So, we're now comfortable that we can have a payout ratio of 25% of prior year PAT from next year onwards, and also pay down debt and continue to fund the aircraft capital expenditure.
Do you worry that this might change investor perceptions of Ryanair? I mean, you've got a very, very high growth trajectory. The payment of regular dividends might lead some people to look at you more as an income stock.
I think we're in the place at the moment where we can be all things to all people. We do have a very strong growth story. We're going to grow in a kind of disciplined and sustained fashion to 300 million passengers from 183.5 million this year to 300 million by FY34. Fleet will grow to 800 aircraft. But we also then have the sweetener that we're also able to pay a dividend yield to our shareholders as well. So I think that helps not only people looking for growth stories, but also looking for some income in there.
So looking at the results, average fares during the period were up 24%. What's been happening since the end of the reporting period?
Yeah, well, we had a very strong midterm break last week. People still travelling in huge numbers over that period of time. Christmas is shaping up relatively well. So we're estimating, and it all depends on what the close-in Christmas looks like, but we're estimating that fares will be mid-teen % increase year on year for Q3 to the end of December. Don't know at this stage where they'll end up in Q4, as is always the case, limited visibility. But we have set profit guidance this morning in a range of 1.85 billion to 2.05 billion, and that'll very much depend, one, on what happens on our unhedged fuel, very volatile at the moment, but also where the final fares end up into the fourth quarter.
You've got 60 new routes opening this winter, including 17 to Albania. What makes that market attractive?
Yeah, very interesting market. A lot of demand as an alternative sun destination, very close to Italy in many ways. They were very keen to get Ryanair into that market. We're seen as an attractive market that'll bring in a lot of high-spending tourists for the Albanian market. So delighted to go in there. 17 new routes in there. Michael was down in Albania 2 weeks ago. We had the first flight last week, and initial bookings strong. So it just expands the footprint across Europe, opening up new markets and new opportunities.
What really jumped out at me looking at the new routes is just how many of them are going to be serviced from Stansted. I mean, it wasn't that long ago that Michael O'Leary, your CEO, was saying that he didn't think there was much more option to expand at Stansted.
Yeah, well, Manchester Airport Group are keen to grow. We took over 6 of the aircraft slots when EasyJet exited Stansted in the depths of COVID. So that's given us the ability to grow a bit more in there, where we're optimising the schedules a bit more as well. So, we would like to continue to grow there. We have a long-term deal out to the back end of this decade.
Now, looking at the statement, it's very clear that you're extremely unhappy about all the disruption that you suffered from European air traffic control disputes over the summer. What sort of response have you had from the European Commission? Because I know you've taken this to quite a high level.
Yeah, you probably saw Michael over in Brussels in September, when unfortunately he got some pie in his face, but we were delivering a petition signed by 1.5 million of our customers calling on overflights to be protected during ATC strikes. This is something that's already done in the likes of Greece, Italy, Spain, but the French don't protect overflights, which means that people who were flying to Spain or to Germany and coming nowhere close to touching down on French soil were disrupted over the summer, and we had to invest very heavily as well in crewing ratios to ensure that we'd have the minimum disruption for our people. We're hopeful that it'll get some traction in Europe. It's within their gift to protect the overflights, which would not only avoid cancellations and disruptions for our people, but also minimise the amount of needless flying that needs to be done. Because if you have to circumnavigate around France, you have to burn an awful lot more fuel and CO2 as a result of that. So I think it's an important environmental initiative as much as anything else.
And obviously you're suing National Air Traffic Services in the UK. How much did that cost you over the summer when flights had to be cancelled due to issues at NATS?
Yeah, well, that was a very disruptive couple of days. The bank holiday Monday in August, and the system collapses. It was also helped, or I should say made worse, by the fact that they didn't appear to have the backup systems able to get up and running quickly. We have taken some action against NATS in relation to that. We estimate about £15 million was the impact of the disruptions and the knock-on delays and the cancellations as a result of what arose there. There was about 2,500 flights cancelled overall across the UK arising from that, and not an insignificant number in the case of Ryanair traffic.
Is it worth contemplating a class action and teaming up with other airlines in this instance?
I think other airlines are equally put out as a result, and you may see some of them joining onto our action, but that's up to themselves.
Well, that was Neil Sorraham from Ryanair speaking to me a little earlier. I can tell you Ryanair shares are currently ahead by some 6.5% on those results. Well, Ryanair's record profits come as the global tourism industry continues to enjoy a post-COVID revival. Well, from today, travel leaders and ministers are gathering in London for the World Travel Market to discuss the future of tourism in the next decade. Well, among them is Alan French, the chief executive of Thomas Cook, who joins you now. Alan, good to see you this morning. Ryanair obviously flourishing. How are you doing?
Yeah, we are doing well. The tourism business, as you point out, is back. It's heading towards the days of 2019. We're slightly ahead in terms of value, slightly behind in terms of volume. So we are seeing it holding steady. Looking into next year, we're seeing the same trend continue. And even though there's a cost of living crisis going on, it's good to see people are actually valuing the time they have spent with their families, doing the things they enjoy, perhaps over other discretionary spend. So I think we're looking at 2024 fairly bullishly.
Yeah, so volumes, you are ahead of pre-pandemic levels.
The industry is. Obviously, we relaunched in 2019. Yes. So, but on a like-for-like basis, as we look at it, yes, we do. By value, we're ahead of 2019. By volume, we're slightly underneath it.
Now, you've said in the recent past the war in Ukraine didn't have any impact on customer sentiment. What about the situation in the Middle East just now?
At the moment, we're seeing small changes in the appetite for countries that are immediately surrounding the conflict. We saw a blip in Turkey. We saw a small decrease in Egypt. Both of those then actually started to recover again from that. So we are seeing people taking it on board, but we're not yet seeing a long-term impact of that.
And you didn't have to tweak prices to stimulate demand in those territories?
Well, I think there's some great pricing going in, particularly for the late autumn, winter into Egypt. So I think that continued.
I mean, historically, Greece has been your biggest market by some distance. Does that remain the case if you look at forward bookings?
Yes, although we are seeing, as I say, as a result of the cost of living pressures, people looking at alternative destinations, perhaps choosing slightly more cost-effective destinations, perhaps choosing to stay for a little less time and sometimes trading down from the star rating. So we are seeing some shopping around, which works for us because actually I think that people still want to take the holiday. They just want to make sure they get as much value from it as possible.
That's interesting. So where is in vogue right now?
Well, as you rightly point out, Greece is still there, Ballarat is still there, but mainland Spain's coming on, Northern Africa's coming on, Morocco, and then we are seeing a lot of people being quite interested in taking families on more experiential holidays. Go to New York, for instance, for a few days, going into Krakow or perhaps other places that are historic. So there is a little bit of changes going on. Yeah, I think the other thing is that we are still post-COVID, and even though this year was relatively hassle-free, people stayed in Europe in the main. And I think that opening up the Caribbean and the Indian Ocean and perhaps even Southeast Asia is starting to feature in people's radar.
Interesting. I mean, of course, sterling is having a relatively good run just now. Does that impact on confidence? Does that make people potentially more confident about going further afield?
I think it does. I think anything that creates stability after the very volatile period that we've gone through has got to be good for the travel business.
There was a lot of commentary last summer when we had this heat wave in Europe about people avoiding ultra-hot destinations and potentially going to further north in Europe, places like Belgium and Holland even. Are you seeing much evidence of that?
We're not seeing much evidence of that, but we are seeing the holiday period extending. You know, at the moment, it's in the 20s in Greece. So we are seeing people booking holidays into the end of October. The season's extending a little bit, and we're seeing hoteliers taking advantage of that. So that's the trend that we're seeing that probably reflects the changing climate in the Med more than we're seeing bookings falling for the peak period in summer.
You mentioned experiential holidays, which I find fascinating. What sort of places what might one see being popular there?
Yeah, well, what we're seeing there is people, taking the holidays, the hobbies that they've got on holiday with them. So, cycling in Palma, for instance, is a big deal where people can go spend some time on the beach, but actually can get up and into the mountains. Sailing again in the Greek islands, perhaps into Croatia is a big deal. People actually learning new skills, so people going on holidays and taking cooking courses in sort of Spain. So there's quite a lot of movement away from let's just go to the beach for a couple of weeks to let's go somewhere interesting and do something that we'd all enjoy doing together as a family.
And what sort of levels of inflation are you seeing in the price of holidays just now?
So this year we saw quite a bit of inflation coming through in both the hotel and the airline components. Looking forward into next year, actually, we see much less inflation coming through into hotel pricing, although there is still some pressure broadly caused by supply and demand imbalance in the aviation sector.
Are hoteliers putting on more capacity, the operators?
They're trying to, but I mean that's a much harder thing to do than putting new airlines in. The lead time is much longer. But we are seeing, investment in new hotel builds, and we are seeing people, hoteliers keeping the hotels open for longer, which is, I think, the most easy way of being able to put more beds on sale.
All right, Alan, got to leave it there. Good to talk to you this morning. Do appreciate it. Thank you.
Nice talking to you.
Some other business news stories for you now. And the government is expected to announce annual North Sea oil and gas licensing rounds as part of the King's speech tomorrow. Prime Minister Rishi Sunak is expected to announce that the move will help support up to 200,000 jobs and bring in billions of pounds worth of tax receipts. Well, the UK stopped issuing new North Sea licences in 2020, but announced plans to resume them in October last year in response to Russia's invasion of Ukraine. A first batch of 27 licences were issued last month. Britain's biggest and best-selling investment trust admitted this morning it has underperformed the market during the first half of its financial year. Scottish Mortgage Investment Trust, which specialises in growth companies such as Tesla, Amazon, Nvidia and Spotify, reported a 2.7% fall in net asset value per share during the 6 months to the end of September, compared with a rise of 4.3% for the FTSE All-World Index. But the FTSE 100 Trust insisted it would not be changing the investment philosophy that it said had served it well for many years. Shares of Melrose rose by more than 4% this morning after the aircraft engineering firm said it had signed a major new agreement with GE Aerospace, the world's biggest aircraft engine maker. Under the partnership, Melrose, which owns GKN Aerospace, will work on GE's high-thrust GE NX engines, providing new technology insertions, aftermarket repairs and production of fan cases for the engines. Melrose said the partnership would be worth $5 billion in extra sales during the 30-plus years during which the engines will be operational. And the would-be buyer of the mail, courier and logistics company DX Group was given today more time to put together a takeover bid. The private equity firm HIG European Capital Partners now has until the 21st of November to make a firm intention to make an offer, the previous deadline having been today. It's being supported by the investment firm Gatemore Capital Management and Lloyd Dunn, DX's former chief executive, having indicated it would be prepared to pay £297 million. Still to come here on Business Live. What a week it was for the markets last week. Let me tell you next how they're doing this morning. Don't go away.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
They have breached the road. There is a lot of gas being fired all around us. शांति से इनको समझाओ वरना ये हम लोग It is an absolute carnival kind of atmosphere out here for Prime Minister Modi's decisive victory. These students are defying the prohibitory orders and now they're going to be arrested. We aim to be the best and most trusted place for news. The roads have been inundated. The only way out is to get people by boat. What is feared that over 200 people might have died because of these landslides. This on any given day would have been bustling with people, but today it's absolutely deserted. This is one of the most sensitive areas of northeast Delhi where there's been clashes. I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
Fly Emirates. Fly better. Fly Emirates. Fly better.
Thank you.
Well, the pound has continued where it left off last week, building on Friday's big gains to trade above $1.24 for the first time since the 21st of September. Sterling currently ahead by nearly 2/5% against the greenback. It's also up by around 1/8% against the euro. The single currency, meanwhile, ahead by 1/5% against the dollar. Well, on the equity markets, after Wall Street's strong gains on Friday, during which the S&P 500 capped a weekly gain of 5.9%, stocks in the Asia-Pacific region had a solid session overnight. Probably the highlight there, not for the first time recently, the Nikkei in Tokyo. That rose by another 2.4% on the back of a 3.1% gain last week. While the index in South Korea, which isn't on the screen, that surged by 5.7% after a ban on short selling was reimposed until the middle of next year. In Europe, however, stocks have made a pretty muted start to the week. All of the main indices, apart from the MIB in Milan, in negative territory right now. Talking points this morning include PostNL, the Dutch postal service operator, is off nearly 11% in Amsterdam. That's after it warned that profits this year will be at the lower end of expectations. Well, here, the FTSE 100, pretty much unchanged, to be honest, on the session right now. Some of the big dollar earners are weighing on the index. Obviously, the good, strong pound means lower dollar earnings. In percentage terms, well, among the biggest fallers are actually some of last week's leading gainers, including Airtel Africa and Kingfisher, which is off 1.5%. Leading blue chip gainers right now in percentage terms is Melrose, obviously on that news of a new contract with GE Aerospace. The shares up nearly 3.5% there. While Standard Chartered, which sold off after its recent results, has been attracting a bit of bargain hunting today. They're 2% to the good. Outside the FTSE 100, well, EasyJet, Wizz Air and TUI all up on the back of that very strong trading update from Ryanair. Among the fallers, Mosman Oil and Gas is down 7% after a disappointing production update, while Hypnosis Songs is off another 3%. That's on news it will not be declaring dividends before the new financial year. As for the oil price, well, that is slightly firmer after Saudi Arabia and Russia said at the weekend they will continue with voluntary production cuts. Barrel of Brent crude will currently set you back $86.18 a barrel. That's up 1.5% on the session. Well, with me this morning is Russ Mould, Investment Director at AJ Bell. Russ, good to see you. Scottish Mortgage, not a great trading update from them today, really.
It's been very tough for any professional money manager, unless you've owned those magnificent 7 companies, you know, Alphabet, Amazon, Apple, Mitten, Nvidia, Tesla, I think I've forgotten one. but unless you've owned them, you found it really, really hard to match your index, let alone outperform it. And I think Scottish Mortgage, with a drop in its overall portfolio of about 3%, they'll probably be relatively happy with that, given some of the rough treatment that's been handed out to other funds around the world at the moment.
Yeah, I mean, they do, of course, own Nvidia and Amazon and Tesla, but I guess you need all of them.
Yeah, you need all 7, and also you probably don't want to put all of your eggs in that particular basket. It has actually been, despite the rally in those 7 names, it's been a tough time for technology stocks because of rising interest rates. It does mean the future value of their long-term cash flows is less attractive in present terms, without wishing to want to get involved in too much of the jargon. The other question that you've had over Scottish Mortgage is the value of its non-quoted shareholdings in companies, private companies. That's about £4 billion, or 1/3 of the assets. They're very careful in the statement to say how carefully they've been assessed, independently, externally. But again, in the time of rising interest rates and when some of them aren't making money, there is a little bit of guesswork in terms of what they might exactly be worth one day at least.
A lot of our viewers own shares in this one. So.
Yeah, and the dividend was flat, which is interesting because it's been up every single year since 1984, believe it or not. So there will be, I'm sure when we get to the second half dividend, there'll be a small increase there to keep that record going. One of the advantages of investment trusts is they can sock a bit of cash away during the good days so that they can pop a little bit out when things are a little bit tougher.
Indeed they can. Now, what about this announcement that we're expecting in the King's speech tomorrow about oil and gas licences?
Yeah, it's interesting. There's a small cap company called Gulf Marine Services with a positive trading update today. Its shares are at a 4-year high. It provides vessels that then lift themselves up to provide support for staff on oil platforms, which is good. But in the end, if you're an oil company, you're going to be looking at this thinking, well, I can take the risk of buying the licence, I can take the risk of doing the drilling, but if you're going to clobber me with a windfall tax at the end of it, I think some of them will still think twice, quite frankly.
Yeah, it feels a bit of a gimmick, to be honest, doesn't it?
I mean, energy security is clearly of vital importance, and as you've just mentioned with OPEC and Saudi Arabia and Russia sitting on those production cuts, it is a big issue, but I think it's going to take a little bit more of an incentive than that to get people really interested if that tax stick is still being waved at them.
Yeah, good point you make there. Now, elsewhere in the FTSE 100 today, we had a trading update from Prudential. Didn't really move the share price.
No, and the shares are at a multi-year low at the moment. I think that's mainly because of just worries over the Chinese economy particularly, and Chief Executive Anil Wadhwani did say there have been regulatory changes in how banking and insurance products are distributed. People are worried about the Chinese consumer. Some of their other emerging markets do seem to be picking up. But yeah, overall, it's just a tough sell for investors right now with that Chinese exposure. M&G has gone, the US business has largely gone. So it's a very, very clean play now on the still very attractive long-term story of increasing wealth, increasing middle classes. And once people do that, they tend to buy more financial products. But clearly, at the moment, it's just going to take some time for that to bear fruit.
Yeah. Now, speaking of tough sells for investors, we heard from Hypnosis Songs this morning. More bad news from them.
Yeah, so after the cancellation of an already announced dividend, and that was because of royalties not coming through as high as expected on certain parts of the portfolio, you've now got no more dividends for the rest of the year because certain products have sold more than expected, so the royalty bonus payments to performers are higher than expected. So investors will be looking, thinking that they're slightly losing it both ends at the moment, so they'll be extremely frustrated. Shares back down to near their all-time low. Now it's, do they persist with it? Do they just wind it up? Do they get a new manager for the portfolio? Lots of big questions to be asked there.
Yeah, really intractable situation there. Now, over the other side of the Atlantic, we heard from Berkshire Hathaway over the weekend. Warren Buffett's...
The Sage of Omaha, still selling shares, intriguingly. So the total asset sales are about $40 billion over the last year, and a record net cash pile now of $157 billion US dollars. Keep you and me busy with the Christmas presents, I suppose. But I think there the issue is, you know, Mr. Buffett, famous for saying, be fearful when others are greedy and greedy when others are fearful. And he's clearly at the moment sort of in defence mode, thinking he's finding it hard to find real value out there. So he's building up his cash pile, presumably in expectation for a market wobble, so then he can get back in. Now, the market rally last week won't have helped him in that respect, but nevertheless, he's clearly patiently waiting for what could be perhaps more difficult times ahead for stock market investors.
Very inefficient keeping that much cash on your balance sheet.
He clearly doesn't think so. He clearly feels that the long-term benefit of that... And he's doing a share buyback, I think, which is quite unusual, but he is clearly waiting for that time. And the operational businesses within there, some of the insurance businesses have found it a little bit tough, but then some of the old classics like chocolate and railways still seem to be doing extremely well.
All right, Russ, got to leave it there. Good to see you as ever. Thank you. That's it from me. I'll be back this afternoon at 4:30 with our afternoon edition of Business Live. Hope very much to see you then. In the meantime, do stay tuned. Up after this short break, Jane Secker's back. See you later.